Hey, how's it going? Welcome back to the Capital Mindset Show. Today we're going to be discussing Costco. And so Costco reported earnings today. We also talked about Alibaba. So if you haven't checked that video, go out and check that video as well. I just want to also note that, just a reminder, in the description below, you can see the content library, which is a new feature I just made for Capital Mindset. So you can actually see all the videos, and it's organized by ticker symbol. So you can look and you can press Control F or Command F, and you can see any of if I've talked about a stock at all at any point in the past, there'll be a video on there. Of course, today we're going to be focused on Costco. So just some stuff I want to discuss with you here today. I won't actually be playing the earnings call. Instead, what I'll be doing is going over the earnings call and what I listened to. So what I found was, or what I want to highlight, is a bunch of good stuff. So basically, wages went up. This is the negative. However, I want to add, if you're a business owner, you do want your talent to be happy with where they're working. You want to retain that talent. And in the rising labor cost environment, you want to have a competitive wage. Okay, so wages going up, that's not that bad of a deal. Now, sales actually were up 16.3%. They actually did also increase their sales in terms of revenue per membership fees to about 984 million, up from about 901 million a year ago. Like I stated with Costco, Costco's business model is quite different. I stated this in previous videos when we talked about Walmart and Target. Remember that Costco generates the majority of its profits from its membership fees, not so much from the retail sales. The retail sales mainly hold up as a way to mitigate the cost of the operations, such as, keeping the warehouse up and running. Now, remember that Costco is sort of like a warehouse store. You are basically going to the warehouse, not really to the store. The store is the warehouse. They're one and the same, which makes it cool. All right, so with that being said, I also want to state that they have about 116 million cardholders, which is actually up 16% year over year. So if you have a membership, and the households are about 64.4 million, which is not surprisingly, also up 16% year over year. If you remember that once you're a member, okay, you get the card. And what we also were noticing was a massive amount of strength in the gas segment. A lot of customers, they come for the gas because it's actually pretty cheap, if you guys don't know that. And on top of that, when we think about what the gas business does for Costco, it brings more customers there. So more customers get to maybe, I need to go get gas. Where am I going to go? I'm going to go to Costco. Maybe while I'm there, I'll stop by and get some milk. These are kind of the things that Costco can benefit from. And let me tell you, Walmart is trying to do the same thing. If you actually listen to the Walmart call or look at Walmart's strategy, they're trying to do very similar things. Amazon, of course, it's its own thing. It doesn't have its own gas stations yet. We'll see what they do in the future, but maybe they end up doing something like that. Okay, so previously, we haven't had a dedicated video of Costco, not that I know of, even though I just created that library, but we can actually check. I'll check right now and tell you guys. But you know what? Why don't we just show you guys the library as well, just in case for anyone new watching. So this is the library, and it should be seen in the description down below. So all you can do is you press Control F if you're on Windows or Command F if you're on Mac, and you just type in COST. Okay, so COST did not come up. That means there's not a video on it. So this will be the first video on Costco. So when this video goes live, you will see an entry somewhere for Costco in this list. And then you would be able to Control F or Command F, and you'll be able to see it there. Okay, and they're organized by date, so you can see that there. What I want to also state is that Costco as a business, I have only optimistic things to say about the business. Now, separating that from the actual stock price, because remember, the stock price is different from the business itself. We want to separate the two. So the stock price actually has been doing pretty well lately, but on the after hours, it actually is down 2.08%. And I'll bring us to this menu because it's a little bit better. So on a preliminary basis, we can see that the PE ratio is about 37.49. But remember, that's GAAP earnings. We're going to see the cash flows. The cash flows might tell us a different story. I don't think so, by the way. I think the cash flows are more or less the same. Now, this company wasn't always that expensive. You can see over the past 5 years, it is up 156%. And if I compare it to, let's say, for example, the SPY, the SPY, it has outperformed the SPY handedly over the past couple years. Now, of course, you see why did it outperform? Well, clearly there was multiple expansion. So a company can grow in share price if it maintains the same multiple as long as it grows. But there can be a double contributor to growth, that being multiple expansion and growth of the underlying business. So if both work in tandem, you can have outsized returns. And so if you were an investor in Costco over this long period of time, you experience that. Now, what does that mean going forward? Well, the higher elevated price does mean that you have a higher risk potential. Now, as we've discussed with other creators when we reviewed their portfolio, a story-driven investor may fall prey to valuation. It is standard that a story-driven investor falls prey to valuation. So something like Costco, which has a fantastic story and it is a fantastic business, might be more susceptible to that story-driven investor. Now, again, like I've been saying, it does not take away from the quality of this business. This is a high-quality business. But do we want to pay nosebleed prices for a high-quality business? Nosebleed prices, it's kind of it's in the name, guys. Okay, so what we're going to do is we're going to come over here to the evaluation model, and I've already plugged in Costco, but we're going to go and zoom in for you mobile users there. So looking at Costco, it does have a strong buy rating by analysts. That's what it's porting in right around there. And so also what we want to say is the price target is $472.76, implying a 1.67% increase in price. Now, the average buybacks over the past couple years apparently is coming in as negative because they diluted slightly, but basically they stayed the same. So the capital allocation strategy of Costco is basically probably to focus on the business, and they have some share dilution from stock-based compensation. That's all well and good. Okay, so let's say that, for example, you're seeking a margin of safety of about 20%, and your growth rates can vary. I'd say the growth rates are probably going to be more in line with, when I penciled it out, I think 15% is the higher points, okay? Let me just be very clear. So 15% is the higher points, and closer to, well, let's go a little bit more aggressive, but I say 15% is the higher point, okay? And if I'm being honest, 10% could be a possibility, or 8%, I don't think so. But I think 15%, 12% is going to be more probable for something like Costco, because it does still have a lot of room for expansion in Asia, which they are doing, or an expansion in other parts of the world. Because for now, they're mainly, the vast majority is still in the United States. And remember, they make profits from the memberships, not necessarily from the sales. They just want you to have that membership, that Costco membership. So I shop at other places, but I also have a Costco membership. So at the end of the day, Costco just cares that I have the membership. If I pay them every single year the fee, they're happy with me. If I spend more money there, of course. Now, if I spend more money there, I'm less likely to cancel my subscription, or let's call it subscription, but membership fee, okay? I'm less likely to do so. And of course, I'm not saying that they run it like a charity. No, they do make a profit. Now, we do know that from their business strategy, they do have some loss leaders. I want to also quote or say here right now that according to this model, they're not at risk of bankruptcy under two metrics, so the Altman Z-score and the model's own metric. Now, the dividend payout ratio, I would not trust that payout ratio of 107%. I just want to highlight that right now. That's a little bit of a fluke going on in there. But the dividend yield also is a little bit of a fluke there, because it's actually not making those dividend payments. That's actually why it's doing that, because there's some sort of special thing going on in there that's actually messing up the dividend yield. But the dividend is less than 1%. It's about 0.8%. Okay, and then return on assets, return on equity looks really strong there. Return on invested capital looks fantastic there as well. According to, and I understand exactly why this is, well, actually that's on a double currency basis. So ignore that one, because if two classes of currency, you would look at these two. And you don't have to, because it's in US dollars. Revenue looks like it's growing nicely over the past decade. Cash flows looks like it grows nicely over the past decade. Shares outstanding remains stable. Now on to the ratios. So taking a look at the ratios, the liquidity ratios look fantastic. They keep a stable ship. Now the solvency ratios have maintained stability. According to the DuPont analysis, we do see again, stability across the board. So they're basically maintaining things as is. Return on equity looks really strong. Return on invested capital is consistently good, and earnings quality is consistently good as well. So I want to highlight those benefits too. So basically, what I want to also show is this right here. So the sentiment score is almost to the positive, and that's on more recent announcements. So that could be because the earnings came out recently. Now we can see that the latest articles posted on Costco from various websites, it does appear that mostly it's talking about the earnings that came out. So it could be that these mentions are kind of slightly, it's basically almost positive, but they're right there. They're right there. But it's basically maybe a little bit down because of the earnings coming out, and they're down about 2%, but who cares? In reality, what I'd say is this business is a fantastic business, but I think my personal opinion is that they're on the overvalued part, okay? I'm going to actually remove this and put 0% instead, so we don't assume any. We assume stability. And let's actually see what basically they're priced in for. So they're basically priced for about, I'd say a 9-ish% in some instances worse, some instances better, but a 9% is what I can kind of expect here. 8% in some instances, if that's what we're doing, but remember that we're basically lowering margin of safety. I wouldn't really go for that discount rate, so keep that in mind. But yeah, that's some things to think about. I think from Costco's perspective, from my perspective, Costco is a fantastic business. I just don't think I'd personally look to invest in it at the present moment in time. It would probably go into my watch list because I do love the business. On that note, guys, thank you guys so much for watching, and I'll see you guys in the next one. Bye.